Hey, welcome to the very first monthly Mortgage Minute. It's a new thing I'm going to be doing every month. We'll call it the Monthly Mortgage Minute with the Mortgages for Less team. So I'm Josh. Many of you have talked to me before. I'm here to share with you news and updates about mortgages and everything relevant. So this morning, the Bank of Canada made a major announcement. They cut its overnight rate for the first time in 4 years. Yesterday, the US Central Bank, the US Fed, did exactly the same thing, and it was a surprise to everybody. So today's drop isn't really a surprise, but the fact that it was a full 0.5% is somewhat of a surprise to people. So in the Bank of Canada announcement, it does seem that the overall Canadian economy is considered to be working well. We're near the right inflation target, all of those sorts of things. And under normal circumstances, we wouldn't have likely seen a change to the interest rate today. However, for similar reasons that the US noted yesterday, the coronavirus of all things is the major threat to the international economy right now. And by extension, it's a threat to the Canadian economy as well, sufficiently that they actually dropped rates by 0.5%. And also, they even left room for another rate drop as early as 6 weeks from now at the end of April. So we might see even further rate drop on the variable rates and on the overnight rate from the Bank of Canada in April, and that will be decided in April. So why on earth is the coronavirus a threat to Canada's economy, enough that we would see interest rates here drop? Well, there's currently less than 3 dozen confirmed cases in all of Canada. I think it was 33 cases as of yesterday. However, it is already impacting the travel industry. My community Facebook group has lots of people discussing changes and canceling of their travel plans, even going to places as safe as Hawaii. A good friend of mine is turning 40 this year, and he and his wife are planning to celebrate. They've been planning for years to celebrate his 40th birthday by doing a couples trip, no kids, heading off to Indonesia. And just a few days ago, they were telling us that they're changing those plans. They're canceling their plans. So they, along with many other Canadians and people around the world, are canceling plans, not buying airline tickets, not buying hotel stays. And you know what? It's not just Canadians here. It's people internationally coming here. So that's where it's also an impact to us here in Canada. So it impacts the airline industry, oil consumption. The airline industry is one of the biggest emitters of CO2. It's also one of the biggest consumers of oil in the world. Hotels, restaurants, and more, they're all impacted, so we will likely see some negative impact in Canada. How much, of course, we never know, but we'll see some negative impact here in Canada as a result of the coronavirus. How long it lasts is also unknown. Now, what does this mean to you? You're watching a Mortgage Minute. It will immediately drop rates on lines of credit, home equity lines of credit, variable rate mortgages. So prime is the retail rate that we as consumers are offered by the banks, and prime is very closely connected to the Bank of Canada's overnight rate. So for the first time in 4 years, the Bank of Canada lowered its rate, and we'll likely see a drop in the prime rate between 1/4 and 0.5%. Unfortunately, the banks don't always move, especially when it's downward, as much as the Bank of Canada does, so they don't pass along all of that stimulus to us as consumers, but we will be seeing some sort of drop over the next couple of days. Some of them will start to announce as early as this afternoon. So variable rate mortgages, they haven't really been very appealing in the last few years. They've even been higher rates than the fixed, and there's been an ongoing fear, especially in 2018 when variable rates increased several times in not a long period of time. There's always this fear that rates are going to continue to increase, and as a mortgage broker, I saw a lot of people stop getting variable rate mortgages and choose for the more secure fixed rate mortgages, and it made a lot of sense over the last few years to choose fixed rate mortgages, with the exception of a few times when the fixed rates were particularly high. Now, with rates below 3%, the variable rates haven't been terribly attractive. In the last month or so, we've even seen rates under 2.5%, and with variable rates almost 0.5% higher, nobody's been taking them. However, this might open up the conversation to perhaps variable rates being more appealing to people on their mortgages. And so, for the first time in a long time, the variable rate versus fixed rate debate is actually part of the mortgage conversation again. Since the coronavirus seems to be the main reason that the rates have dropped, once that the risk from the coronavirus globally has subsided as we maybe get immunizations or more effective treatments against the virus, chances are we'll likely see some interest rates increase again here in Canada unless there's other external factors that come into play. So the future is always uncertain. Fixed and variable is part of the mortgage conversation again. My team and I are always here and ready to have that conversation with you.